Hello friends, today we are going to deep dive into Reliance Power. Established in 1995, Reliance Power is a part of Reliance Group, led by Anil Ambani. They generate electricity through different sources like coal, gas, hydro and solar power. In this video, we will discuss about their business, what are all the headwinds facing in their business, how they can reduce their debt, what are all the future business model, key risk, whether we need to consider or need to avoid the rally. Present business model. Their biggest project and cash cow is Sasan Ultra Mega Power Project in Madhya Pradesh, which produces a large amount of electricity. The Sasan Ultra Mega Power Project is one of the India's largest coal-based power plant. Located in Singrauli district of Madhya Pradesh, it is a 3960 megawatt project with 6 units of 660 megawatt each. Key state receiving electricity from Sasan was Madhya Pradesh, Uttar Pradesh, Punjab, Haryana, Delhi, Rajasthan, Uttarakhand. Challenges. Company facing many challenges like high debt, dependency on coal, and environment concern. High debt, which impact their business. As of March 2013, it was 27,482 crores and consistently reducing their debt. As of March 2024, it was 18,766. Even though debt still in higher side. Dependency on coal. Many Reliance power plant are coal based, and if there is any breakdown in coal supply or increasing in coal price can increase operational cost and reduce profitability. Environmental concern. Large energy project, especially coal based one, can face opposition from environmental group and local communities, leading to delay or cancellations. First challenge is high debt. How many ways they can reduce their debt? First, restructuring debt. Reliance Power is working with banks to change their terms of its loan, such as extending their time to repay or lowering interest rate. This makes the debt easier to manage its short term. Using earning for repayment. The company is trying to improve cash flow from its power plant to use money earned for paying off debt. Number 2, selling the asset. The company plan to sell asset which is no longer need, such as power plant that are not performing well to raise cash. Selling shares in project. They may sell part of their ownership in certain project, especially in renewable energy, to get more fund to pay their debt. Monetizing land. The company may also sell or lease unused land to raise money. Third way is improving their operation, like cutting cost. They are looking to reduce unnecessary expense and improve the efficiency of their power plant, which could leave more money available to repay the loan. Generating more power. By boosting the output of their large power plant, Sasan Ultra Mega Power Project, they can increase revenue. The fourth way is securing long-term contract. Signing long-term power purchasing agreement. These contracts guarantee steady income from selling electricity, which helps Reliance Power manage its finance better and give confidence to the lenders. The fifth way is, if need, company can sell their coal mines. The sixth way is bringing new investors, raising money through equities. Instead of borrowing more money, the company may raise funds by selling shares, which brings in cash without increasing debt. Partnership with global investor. Reliance Power could seek investment from foreign companies interested in renewable energy. The second challenge is dependency on coal and environment concern. If we see the future outlook of the company future plan is number 1, renewable energy like solar and wind expansion. Reliance Power wants to focus more on green energy like solar and wind power to reduce their use of coal. Number 2, clean energy transmission. Switching from coal to solar. Reliance Power to move from coal power to solar energy as a part of their future strategy. Battery storage. They are also exploring battery storage to ensure power is more reliable even when sun isn't shine or wind isn't blow. They may look for opportunity in other countries like Bangladesh, especially in renewable energy. Number 4. Government partnership. Reliance Power hope to benefit from government initiatives that promote renewable energy, which could give them financial support through subsidiaries. These success which largely depend on how they manage their debt and how quickly they can shift towards renewable energy source. Anil Ambani Reliance Power is planning to invest in Bhutan renewable energy sector, focusing on hydropower and solar project. This investment support Reliance Power goal of expanding its clean energy portfolio and reduce its dependency on coal-based power. Investment highlights focus on hydropower and solar energy. Bhutan has abundant water resource, making it ideal for a hydropower project. Solar energy is another area of focus. India-Bhutan collaboration. India has a history of importing electricity from Bhutan hydropower plant. Reliance Power involvement could strengthen its partnership. Why it is important for Reliance Power? First, renewable energy shift. Reliance Power is moving away from coal and investing in clean energy source like hydropower and solar, which aligns with its debt reducing strategy. Number 2. Geographical expansion. This investment allows Reliance Power to operate outside India and tap into international market. Number 3. Cross-border energy trade. Bhutan export hydropower to India. Investing in Bhutan energy sector could help Reliance Power provide clean energy to India. Number 4. Government support. Both India and Bhutan support renewable energy, providing incentive that reduce financial risk. Number 5. ESG goal. This investment improve Reliance Power reputation as a green energy company, attracting investors who prioritize environmental, social and government ESG standard. Key risk. Reliance Power facing several key risks that investors should consider. Here are some of the main key risks. Number 1. Debt burden. Reliance Power has historically carried a significant amount of debt on its balance sheet. Number 2. Regulatory risk. The energy and power sector is heavily regulated. Any changes in government policy, regulations, or tariff can impact the company profitability and operations. For example, strict environmental regulation or unfavorable changes in power purchasing agreement could hurt the revenue. Number 3. Project delay and cost overrun. The power sector is highly intensive and a large-scale project can face delay due to various factors like regulatory approval, land acquisition issues, or environmental concern. Cost overrun is such project can erode profitabilities. Number 4. Fuel supply risk. Reliance Power operates in particularly thermal power plant, which is highly dependency on coal and gas. Disturbance in fuel supply, rising fuel cost, storage can affect the company's operational efficiency and increase expense. Number 5. Competition. The energy market is highly competitive with both private and government players. Number 6. Shifting towards renewable energy. There is a global shift towards renewable energy source like solar and wind. If Reliance Power is unable to adapt and diversify into clean energy source, it may face challenges in the long run due to change in industrial dynamic and increasing demand for sustainable energy solution. Investors should weigh these risks carefully before making decision related to Reliance Power. Guys, before investing in Reliance Power, please weightage these risks carefully before making decision related to Reliance Power. Friends, note, Reliance Power is a small cap company with a market cap of 17,767 crores and a company having a debt of 18,766 crores. Enterprise value is 35,619 crores. Even though company consistently reducing its debt, still debt is in higher side. Conclusion on Reliance Power. If Reliance Power can reduce its debt, improving its running operation and investing in clean energy, it has a chance to do better in long run. The company's success will depend on how well it handles government rules and keep its fuel cost low. Since the power industry requires a lot of money, investors should carefully think about both the risk and the possible rewards before deciding to invest in Reliance Power. It is a high risk and high reward stock, but in the same sector with a good management, there is a such company like Tata Power. Even though if you are interested in the company, make sure you are not holding more than 1% of your portfolio. Hello friends, this is not any buy or sell recommendation. Please do your research before investing your hard earned money. Thank you for watching. See you in next video. Until then, goodbye.